What's up, everybody? This is Big Mike over at Foos4 Trading. Welcome back to the channel. I'd like to talk today about how to trade the market when there is a huge red day. So this is very important in my opinion. It's something that I got used to over time, and in my opinion does take time to understand, but once you get it, it can be very comforting because obviously the market's a two-way street. We've obviously had a major run in the Dow over the past year or so. Then everybody asks what happens when the market crashes. You know, how are you going to trade? You get a lot of people ask you about that, in my opinion, that are not really familiar with trading. But as a trader, you need to ask yourself, well, how am I going to do that? Whether your strategy is good enough to trade both two types of market conditions, when the market is doing well and when the market is dropping. So what I want to introduce today is how to trade volatility ETFs. So you'll see on my screen we have the Dow right here on the left. Yesterday we had a pretty nice red day, the biggest red day in about a year. We're down 360 or so. So we're going to pull up the 2-minute chart on the Dow, look at yesterday's action, and here on the right you're going to see I have UVXY, which is the triple levered volatility index. So how the Dow, the S&P, and these volatility indexes are related is they are indirectly correlated. What that means is that when the Dow is going up, these volatility indexes go down. When the Dow is going down, these volatility indexes go up, basically accounting for increased volatility, and is also known as the fear gauge. So you can see that anytime the Dow has a major move to the downside, as we saw yesterday, UVXY has obviously these things get really diluted, and over time they just constantly drop. But you do get these random pops now and then. You can see we had one back in August last year, one here, one here. So they're good trading vehicles. Investing vehicles is another story. Trading vehicles, yes. So how you want to interpret these guys is UVXY had a nice pop yesterday, and you can basically put the Dow, which is the index that I like to use, and the S&P right next to each other, and you can see that when the Dow had a major pop in the morning, right out of the open, we kind of had a nice little retracement. People thought maybe we were just going to bounce immediately. UVX, and then completely ate it to the downside thereafter, where we weren't going to get the bounce. UVXY did the exact opposite. We basically had a picture perfect F1 right out of the open, and we were talking about this in chat for a possible mag to 13. Another one you guys can look at that's a little bit cheaper is TVIX. So I'll use this one. This is just a double levered instead of tripled. More price friendly, but we were talking about this for a possible mag to 7. So you can see once the Dow bounced and then started to decline, UVXY basically declined and then started to rip. And that's how you can trade these, is by putting the Dow or the S&P right next to one of these volatility index charts and trade them in reverse of each other. And then you can see later in the afternoon when the Dow did have a nice little bounce right here between 10 and 12, UVXY had a nice drop. And these things definitely fade off pretty quick, which is why they're better trading vehicles. But you can see the Dow was in just a constant decline all day yesterday, and this was a pretty decent trading vehicle. When the Dow did drop, you can see this had a nice bounce back up, and the Dow did bounce at 1 to 2 p.m., and this had a nice drop, and then we dropped again from 2 to 3 p.m., and you can see that this bounced and then ended up just fading off. You can see that futures are up decently today, so you can see that this is collapsing. But this is a good way because, in my opinion, there's only two ways to trade the market when it's really down, as it was yesterday. You're either hitting the first hour or two really aggressively because the intraday trading action cannot be very technically friendly, or you're trading these volatility ETFs. So yesterday was the type of day where I traded the first hour, bailed, made some money, and avoided the headache and trying to really trade the market when it was having a significant red day. Other than that, if you want to trade the market, these ETFs are great trading vehicles. If you're looking for the inverse of TVIX and UVXY, it is SVXY, which as the Dow goes up, this will go up. As you can see, this is done very well. And it's basically almost like a chart of the Dow, as well as XIV is another one. So there are trading vehicles to trade in any type of market condition, especially when the Dow and the indexes are having a red day. A lot of traders like to gravitate towards these volatility ETFs. So if you have any questions about these guys, email me, mike@foos4trading.com. Otherwise, I'll see everybody in chat.